Hello guys. So three trades were taken today. Mainly it was Bank Nifty which I was playing, and other than that there were a spread on Bank Nifty. There was a buy call option on Bank Nifty, and there was a HDFC calls. So firstly, the Bank Nifty calls 37,000 gave a good profit, and I had taken the next week expiry, not this one, because I was like, if the market doesn't fall more, and even if it consolidates here and then goes up, then I will have time. So that is why I took next week expiry. I needed time to be right. So this was the Bank Nifty 37,000 calls which I had bought. Then the next one was a spread which is called as a bull put spread. Your view in that is that you are expecting a sideways to bullish movement in the market. So I had sold the 37,100 calls, and I had got the 35 200 puts which I had bought. So I had sold the 37,100 puts in which I wanted Bank Nifty to stay above 37,100. So the profits in that whole spread is 5,249, and the approximate margin which I had to give for this position was around 40,000. So all in all, it equals to a two trading sessions, I had a 13% of profit. Then the third trade was the HDFC 2300 calls. So HDFC 2300 calls gave me a good profit. The invested capital in this was around 31,000, and I got a profit of 6,100. So the percentage I got, the return on investment was 20% on this trade, and this is the position which I entered today itself. So all in all, I invested for this whole or these position, I invested 1,09,000 rupees, and I got a profit of around 34,600. So that equals to a 32% return on my investment, which I'm very happy about. And let's go and let's see the analysis.
Hello guys. So this is the analysis which we are going to do of the trades which we had taken. So there were three trades. One was the 37,000 calls. Then the other one was the bull put spread on Bank Nifty, and the third one was HDFC. So guys, it is really important for us to analyze each one properly. So let's firstly start with the signals of why was I holding on to the long positions after looking at the fall from yesterday. So basically what I was looking at, and I had posted on my socials as well, that Nifty is at a make or break level. So Nifty was at a make or break level, a very similar setup to what had happened last time in Bank Nifty. So if you see the trend line, this was the trend line in Bank Nifty which we had played on 8th Feb, and a similar kind of setup was there, but there were some looming concerns of the geopolitical tensions on this one. So what I did was that I thought this is a area from where we could bounce. 16,800 around levels was the level which I was looking at, and I was like, yes, we can bounce from here. Second was a thing which was giving me confidence was the German index chart, which is DAX. So DAX was giving me a good confidence. If I zoom out on this chart, I think one of the reasons why I was holding on to my longs, the positions which I had made yesterday, and I was holding on to them for today, was because if you look at this level in DAX, this trend line on the lower level around 14,800, that's where I posted this chart yesterday around 14,900, that we could test 14,800 today on DAX, and that will be the make or break levels, and we bounced from there, and today we saw a good bounce. But what happened in the morning as well, we were not looking that good at opening in Nifty. There was selling which was coming. So for me, the importance was that if we hold the levels of yesterday's low in Nifty, we are safe till that point, and that was happening. But Bank Nifty was looking weak. So then I went into the short-term charts, and then why did I hold my Bank Nifty position? So Nifty was fine, but Bank Nifty was looking weak. So if I go into the short-term charts, there was a divergence which I am going to show it to you. So what is divergence? That the trend on the price is downward, but the RSI was signaling a upward move. So this is what a divergence is, and this was a bullish divergence, and I will show the chart to you. Around that point when I posted, we were around 36,800 in Bank Nifty. So here is the screenshot for you. I posted this chart, that bullish divergence in Bank Nifty 15 minutes chart. If we zoom into this and see if you see the trend, the price action was this, but the RSI was signaling a positive trend. So this is RSI, and that was on the upside, but the price was downside. So this is a bullish divergence which was happening, and this bullish divergence was also happening on various stocks. HDFC was seeing this bullish divergence, the financial sector index was seeing this divergence, the infra sector was seeing this divergence, the realty sector was seeing this divergence, and Bank Nifty was showing this divergence. So I wasn't really sure that I should exit my longs while seeing the loss, so I held my nerve and didn't exit my long positions, the upside positions which were there. So discussing the 37,000 CE, this is why I was holding the 37,000 CE yesterday and today morning as well, and those positions has given me a good upside momentum. So the reason was DAX, Nifty was holding on to the support levels, and then we saw a good bounce because of the bullish divergence. So 3 points on Bank Nifty. So this was the risk I took, and this time it paid off. So after that, the next thing was, why did I make a bull put spread? Bull put spread. So bull put spread, you are sideways to bullish on the market. Your view is sideways to bullish. So I shorted the out of the money puts which were expensive. And why did I short? Because the market was pricing in the VIX, which is the volatility index, was around 25 at that point. 25 means that the premiums were expensive and very high. So when the premiums are expensive, I thought the volatility will come down from there, and from 25, yesterday also it came down, and today as well, now it is at 20. So when the premiums come down, the expensive premiums start to come down. So as a seller of options, you want the premiums to come down. Seller of options, you want the premiums to come down. So premiums were expensive, but at that point the volatility index was at 25, and I was thinking that this will cool off, and it did cool off, and I made money on this option. So what was the bull put spread? I had shorted the Bank Nifty puts, short the Bank Nifty put at 400 around levels, and I had hedged it with the 35 200, I think 200 position put. So I had bought that. So I had hedged and got a good margin as well. The margin got lower because of that hedge. So this position was made in 40,000 margin approximately, and then I went ahead and took the trade. And then it paid off. I exited today around the 38,000. My all positions target was 38,800 firstly, but then I saw the momentum is good, and then I exited all my longs in Bank Nifty at 38,000. So this was the second trade. And the last one, bear with me, we will discuss what happened in the last one. So the last one was HDFC. In the morning, I was looking at HDFC and I was like, the HDFC highest put interest is at 2300. So 2300 has had the highest put writers, and I thought it won't let the index come down from here. So 2300 was the level which I was thinking. So I bought the 2300 calls in HDFC, and HDFC is a has a good weightage in the Nifty index, and Nifty was looking stronger than Bank Nifty. So I thought if Nifty bounces from here in the morning, then this HDFC might take the lead of making the index bounce. And that's what happened. HDFC gave me a good profit as well. So Nifty went up, HDFC also went up. So three trades, that's the thinking and the mentality between all these trades. I would suggest everyone that right now the Nifty had made a gap down. So this gap down from yesterday, opening of gap down, was the area where the market could go. But now we have covered the whole gap today. So there is a possibility that we might halt here and then consolidate. But if we cross this level, then we turn bullish and 17,500 is possible. So tomorrow's trade, keep an eye on this gap which we had created. If this has filled up and if we cross these levels as well, then this is good for the markets. So that's all for the analysis, guys. I hope you liked it.
So guys, all in all, these were the analysis of the trades which I had taken. I was in a risky play. Yes, I would agree to that because there weren't any positive news yesterday about the whole situation in Ukraine and between Russia and Ukraine. But I was confident. What I did was I just held my nerve and I traded what I saw on the charts. I didn't go by the news, what the news was telling. I just looked at the charts. I knew that the German index support level, important support is this. And seeing a bounce from there, that gave me a confidence that I can hold on to my positions. And finally, it paid off. It was a good decision. So my risk appetite was different. Your risk appetite would be different. Always trade by managing your risk. I had taken this risk because it came under my appetite. So always remember to take a risk which doesn't make you uncomfortable. I was comfortable with this risk and that is why I took it, and the result is in front of you. So this was the moral of the story. Always manage your risk. And still, if you haven't subscribed to the channel, do hit the subscribe button and also hit the like button if you like the analysis and this whole trade which I had taken. See you in the upcoming videos.